Cha-Cha reporting live from the Money Mantra, and we are back with another Forex education video. I created my channel to help as many people as possible become independent and profitable traders. So if that sounds like you are in the right place at the right time. So welcome or welcome back to my channel. If this is your first time here, I want to let you know that I have over 400 quick videos just like this that will help you become a better trader. If you just know exactly what you're looking for, I will go directly to that playlist. I have things on indicators, candlesticks, market structure, and almost anything that you would want to really break down and understand as a beginner. So get nosy. And if you don't see a video on something that you would like to know, just go ahead and leave me a comment below and I will add it to my video queue. Now, in today's quick video, I'm going to be doing one of my favorite styles of video, which is a trade breakdown. And in these videos, I review trades that I've posted in my trading community throughout the week. Now, I really like to do this because over time, especially if you've been here, you will notice that my process has become even more simplified. And I did this for myself, but as an educator, it's important that the process that I have is extremely simple to follow and easy to duplicate, especially for new traders. So with this one strategy, we're only going to be using one indicator and some of the free tools that TradingView has, so it's really going to work in your benefit. Now, if you don't have a TradingView account, you can create one for free by using the link under this video. And also make sure that you follow me because I do post trade ideas on there as well. Now, for this particular trade, it was for a gold sell, and I actually was looking at it on the daily time frame. And although I often start my analysis on the daily time frame, I typically will post my entries that I take on the shorter time frame. But today we're going to go through the whole entire process, and this is something that you should be able to do and to find profitable trade ideas on your own. So here I wrote that gold is down for the day, so I'll be focusing on sells for the week unless I see a dramatic shift to the upside. I'll also be setting sell stops and TPs in increments of 500 pips all the way down to 3286 because that is what I see, but always feel free to do what you want. I typically will set my stop losses 700 to 1000 pips on gold for a swing trade. Again, do what works for you. And then we have the potential sell stop and TPs that I put on this trade. And I always encourage people to check their charts before they copy trades from anyone because we don't all trade the same way and you may see something different. Now, one thing I want to say is that I will often use pending orders for my gold trades because when gold takes off, it really takes off. So I'm not doing market execution. I'm simply waiting for the market to reach a particular level and then my trade will be triggered and it will hopefully continue to go that way. So that's just something that I want to highlight because sometimes in these breakdowns, you will see that the market retested or retraced to a previous place, but you have to remember if you set the appropriate pending order, nothing has happened in your trade until the market has actually reached that level. And that's just something that I learned from gold because I will always get into early. My trades would hit stop loss just for the market to go in my favor. So I've really learned to respect the levels of gold and wait for the momentum to pick up. And that's really something that you can write down because that was a huge shift that I made that helped me to become an overall better trader. So I posted this trade in the community on July 28th, 2025 at 13:59 p.m., which is almost 2 p.m. So we're just going to go back to the trade and it's going to be on July 28th. And we are going to go to, let me put this on a smaller time frame so we can actually go back. And it was July 28th at around almost 2 p.m. So this is what we were looking at when I came into the market, and this is the process that I follow. So, firstly, if we were to start on the day, the first thing that I noticed were that the sellers were picking up momentum. Now, if you are completely new to trading or you haven't seen many charts, you will notice that the market will sometimes be going up, and you'll tell this by the shape or you'll see more blue candles than red candles, or sometimes the market will be going down, right? You'll see more red candles than blue candles, and you can also tell by the shape because it will literally look like it is going down. Now, one thing I've started to incorporate more into my analysis is to really focus on the candlesticks to see what type of story they are telling about how the market is moving and where it plans to go. So, for example, if I were to look here, I can see that although we previously had some heavy selling action, because I can see more red candles than blue candles, and they're also quite big. A candle has a few parts. It has the body, which is the long shaded part, and then it also has the wicks. If you see long bodies on candles, that's typically a sign that that particular sign is dominating the market. So for here, we'll see that the sellers were dominating. But then when we look at the area that I circled, we can see that the sellers were losing momentum. And as those red candles were getting smaller, the blue candles were getting bigger, letting us know that the market wanted to have a change in direction. So the first thing I noticed when I actually came into the market, and this is something that you should start to consider too, is which side is in control? Is it picking up steam? Is it losing steam? And what's really going on here? So here I can see that for the last 2 days, the buyers were in control. We had a strong blue candle, but then we had a smaller blue candle letting us know that the buyers were running out of energy. Not only were the buyers running out of energy, but the market had actually reached a cap and come to an area of resistance. Now, an area of resistance is typically what you will see after the market has been buying for some time. It will literally just stop going up and it will start to come back down. This is known as an area of resistance. Now, if the opposite is happening and it's going down, and it refuses to go down anymore and turns around, that is known as an area of support. So here we can see the buyers were running out of steam, the sellers were picking up steam, and for these 3 days, the market actually sold back to a previous area of support. So these are all things that I'm noticing before I even add any tools or indicators to the chart. The market has reached an area of resistance, which is a sell sign. Also, we can see that the sellers are picking up momentum just by the shape of the candles. And the more you're trading and the more that you are on the charts, you'll be able to analyze these things a lot quicker because you'll know exactly what you're looking for. So if you were to have a confirmation checklist, you can ask yourself, is the market near an area of support or resistance? And we can also have a checklist here. This is something that used to help me a lot at the beginning of my trading journey, just to have a checklist between who really has the most confirmations, the buyers or the sellers. And whichever side has the most, I'm going to take the trade in that direction and just use proper risk management. So first we can see it's near an area of resistance, right? So that's a sell confirmation. And we can also say which side has the most momentum, the buyers or the sellers. And in this case, the sellers had the most momentum. So far, we have two strong confirmations for a sell. We have zero confirmations for a buy. Now, the third question I ask myself is, has there been a break of structure? And if there is a break of structure, was it to the upside or was it to the downside? Now, a break of structure is exactly what it sounds like. Sometimes the market will go up and hit an area of resistance, and then it will come back down to a previous area of support. And you'll notice that the market will stay within a certain range or channel for a while before it actually breaks structure up outside of this channel, letting us know the market wants to buy, or it will break structure on the downside, letting us know the market wants to sell. So the third question you can ask yourself is, has there been a break of structure to the upside or the downside? And in this example, we can see that there was a break of structure to the downside because this candle on this day closed outside of the channel. So that's going to give us our third confirmation for a sell. Now, for me, I like to say 3 confirmations are good, 4 confirmations are great, and 5 confirmations are fantastic. So far, this would be a pretty good setup to take the trade for a sell based on what I had. However, I do have one indicator on my chart, if you notice at the bottom. So we're also going to take this into consideration and ask some questions as well. I am a strong believer that if something is on your chart, it should have some type of relevance to your analysis. I know a lot of us, especially when we are in the learning stages, we will add a bunch of indicators, but we're not really considering them or knowing what they do. They're just there taking up space. However, if it's on your chart, you should have confirmation questions that align with it. So for me, my confirmation questions for the stochastic, and this could be your fourth question, is the stochastic facing up or down, right? If it's facing up, let's look at this example here, and let's look at this example here. Usually that's a reflection that the market is going up versus when the stochastic is facing down, that lets us know that the market is going down as well. So on the fourth question, we get an additional sell confirmation. So now we're moving into, this is a really good setup. If you grade your trades, it's moving into a B plus setup. Anything that's really B plus and above, I feel confident to take. But if you still aren't sure at this stage, you can ask yourself additional questions about the stochastic or any other indicator you have on your chart. So for example, is the blue line or orange line on top on the stochastic? Again, notice how when the stochastic is facing down and the orange line is on top, we will get some selling action, right? Here's more. But then notice how when the stochastic is facing up and the blue line is on top, we tend to buy, right? So we have yet another sell confirmation with the orange line on top. So this is already an A plus setup, and this is why I decided to enter this trade for a sell because I saw that I was getting strong bearish signs on the daily. Now, if you are not familiar with the trading time frames, I would say that the higher the time frame is, the stronger the confirmation is, simply because it's more data analyzed over a longer period of time. So we're going to go ahead and use our tools on TradingView to mark up what we've seen, right? Just so we don't have to remember, we're going to mark up that area of resistance. And another thing you want to do is just mark up other areas of support and resistance as well. Because if we're selling, the market is going to be going back to those areas of resistance. If we are buying, the market is going to be going, I'm sorry, if we are selling, the market is going to be going back down to those areas of support. And if we are buying, the market is trying to go back to those areas of resistance. So now that we've done our analysis and we've decided on the sell, the next thing for us to do will be to figure out where are our take profits going to be and where is our stop loss going to be. Now, if I'm selling, my stop loss is just going to be above a previous high, right? So I can see that the previous high for this level was 3343. Let's just go ahead and put our stop loss there. And then we're going to set our take profit at 3260. Now you can have as many TPs as you want going down. Like I said, I set pending orders. So what I will be looking for is the market to get down to 3305, hit my first TP at 3300, and then continue to drop from there. So let's just go ahead and see what actually happened in this trade and if our levels were appropriate. So as we can see, the market was consolidating for a couple of hours. It actually did go up pretty high, but it was still in this consolidation phase, meaning that it was moving sideways. Now I'm so happy that I set my stop loss where I did because like I said, if you respect the levels of gold, then you have no problem not getting stopped out of your trades. And you can even move your stop loss once you see that the market isn't going to reach that level. And you can just trail it all the way down. So all of the TPs were hit on this trade. If we go back to the original trade idea, we can see that Our lowest TP was 3295, and the market actually got down to 3268. So if you would have stayed in this trade even longer, it could have been a more profitable idea. But all we did was follow a simple process. So we identified support and resistance. We figured out if the market was near support and resistance. We looked at what the candles were doing. We looked at what the stochastic was doing. And then we simply just waited for things to go in our favor. So this is how I trade every single time. If you guys want to see more videos like this, I have over 120 trade breakdowns on my channel, and they go through all of my different traded styles that I've had from the beginning. But if you are new to trading, if you are still on the free version of TradingView and you just need one solid indicator and one solid process, I would say that this is the one for you. Not only does it work on other time frames, but it works across many different markets and assets as well. And this has honestly been my most profitable strategy so far. As of July 31st, 2025, I have not taken any losses in July, and that's based on using this strategy. Now, I really hope that this video was helpful. If you learned something, make sure you subscribe to the channel, give it a thumbs up. If you have any questions or comments, you can leave them down below in the comment box. And if you'd like to work with me outside of YouTube, get even more trade ideas from me, and join my trading community, that information is down below as well. But that's really all I have for you guys today. Until next time, rich friends.